afternoon, everyone. I hope everybody's enjoying their long weekend. Happy Easter to all. You can find us on the website, Twitter, Instagram, Discord, and you can check our channel. Remember, we're not a broker dealer. Our past performance doesn't give us any indication of future results. Use at your own risk, and data may not be copied unless requested from us. You can trade crypto, you can trade stocks, option, futures, currencies, and commodities the way you like, whether you trade the side market, up market, or down market. The first slide is going to just say happy holidays to all of you guys out there. Happy Easter. Enjoy your long weekend. And once again, check our website. Let's go to the first slide up here. What I did, I put the combination of the S&P, NASDAQ, and the Dow on a weekly chart showing the overall ranges from 2018 till 2024. And we have cleared the 2022. We created a rounded bottom, little cup, this is the handle, and eventually broke up. We're getting a little bit extended. Is there going to be here distribution on the institution level, or is there rotation between the different sectors out there? Pay attention to small cap, the bond market, RSP, IEI. At the same time, the large cap and tech sector, XLK, to keep in mind if there is rotation in different stocks and different equities. So the most important thing I want to go over is the setup for the coming week. I won't be on the desk this week much, but I want you to remember I'll be back by the following week. I'll be traveling. If I do get it sometime on the desk, I'll post a little bit on Twitter and I'll post on Discord for you guys. So let's go to the first slide right here. And what I did, I showed you the linear regression channel. And we are starting to get away from the 50 simple moving average. The 18 is in the green. The 50 is down here. F6 is the 61.8 fib from low to high from the prior year. You can see we're a little bit extended, but pay attention to what the overall market going to give you. Let's take a look at the IWM, and I'm going to use the ETF here to show you, is it a possibility that because we were range bound in 2021, then eventually in 2022 we fell down. 2022 and 23 were range bound, doing zigzagging, and eventually we created that big V and a little handle, which is the cup, and trying to break out. Pay attention to these two candles here. If the small cap IWM, IWN, or the RTY or IUT going to break out and continue higher, pay attention to the small cap and as well as mid cap, as well as the Eurozone. Let's go right now and take a look at XLK. That's the tech sector. You can see that the tech sector is starting, to get a little bit exhausted. And what I wanted to use the candles up here to show you that we are starting to get range bound. Week 1, week 2, week 3, week 4, week 5. Still side action on XLK. RSP. Let me just go back. RSP. And we can see that the Invesco S&P equal weighted, you can see it's starting to grind, it's starting to get very sharp incline here each week, grinding higher and higher, except this consolidation week where it fell inside the range. And these 2 weeks have been higher, but we are on a sharp incline away from the 18 SMA and the 50 SMA. Do pay attention in case we come back in a little bit. That's on RSP. Take a look at II, which is the 7 to 10 year, 3 to 7 year notes. And we can see that after the bond market in 2020, we fell very sharply in 2021. 2023 was very deep decline. We created a W, couldn't clear that 118.78. Let's call it 118.80. Once we clear that, there may be possibility if the Federal Reserve Board going to change their policy regarding interest rates. Pay attention to that channel if it can come back to the 116 simple moving average. That's the orange. The 50 is in yellow, and once again the red and green is the 18. And I do have a 200 SMA way up there in the 250, but I'm paying attention to this area here in case we consolidate, grind up, and clear this area and clear these candles here. That was the consolidation. This was the breakdown of those candles. So we have to pay attention to what the Feds are doing, as well as the global market and the overall economy. Let's go right now. Take a look at the New York FANGs, dollar sign, New York FANGs, and that could represent the mega, basically, top 10 tech sectors such as Microsoft, Meta, Apple, Google, Tesla, and so on. We can see that after this big run in 2020, 2022 was a little higher, and we came back, retested the 50% range of the breakout, rallied higher, created a rounded bottom, and once again, we created a flag, or you can consider this a cup right here when it broke out of this area here, in consolidation, retested it and broke up, came back in January of the first week of 2024, rallied higher, but we're starting to get a little bit exhaustion in the New York Fangs. Pay attention to them. Last but not least, let's go take a look at right now. What I want to do is basically look at the GLD. I'll do the ETF in gold. I'm not going to show the gold in the GC or the micro GC. I want to show you that this W we've been range bound since 2020, 21, 22, 23. We're starting to get a breakout. Pay attention if this is going to be continuation in GLD or GC in the commodities or the futures of gold. I'm going to show you micro GC because it doesn't show historical as much, but you can see where the extension was from that 2020 and the rally up. You can see where the extensions are. We are coming to the 25%. We're almost at the 23. We are in that linear regression uptrend. If I show you here, you can see we're zigzagging. Pay attention to this. If it looks above and breaks and fails, or does it continue higher in micro GC? Let's now take a look at the micro ES, and I'll do the NQ, and we'll finish up a short weekly video to keep it simple and easy for everyone. You can see where the S&P 500, when the E-mini fell down, rallied up, created that cup and handle. And we are here on a sharp incline. You can see that sharp incline after that flag breakout. We got this professional gap. We have this area that's consolidation before the breakout. We continued higher, but I am paying attention to it on the weekly. I'm going to show it like this. Let me do the NQ before we break it down into charts, micro NQ. We can see a similar situation here, similar setup, rounded bottom, a handle or a flag breakout, and this is the gap here, and the NQ is starting to get a little bit tight. You can see the consolidation, break up, consolidate, break up, but inside week this week. So let's go now to a shorter time frame intraday. What we're going to do is use 30 days so everybody can be, they can go back 30 days out. And I'm going to use 6 hours instead of 4 hours or 2 hours. That way, to simplify the candle, in 24 hours, you have 6 candles forming with the European market, the Asian market, the Middle East, as well as the US market, Canada, and South America. The reason why I'm putting this, I want to show the overnight action in relationship to this week's range in the NASDAQ. This was last week's Friday high. I'm not going to take that. This is this week's high and this week's low. If I'm going to consolidate it and use the measured move to look at the level here, I'm going to do this, and I'm going to extend this extension, edit the property, and I'm going to go back till March 1st, 01, so everyone can see where the levels are on that chart. Even coming back to that 50% or the 61.8 fib and 100% of this trend, because we were zigzagging. We looked up, fell back in, looked below, break back up, looked up, and we are inside this week's range. If I zoom in from here, what I want everyone to pay attention to, this high here and this low here in the coming week. If we end up losing this linear regression uptrend channel, I would look for the backside of this channel for the 38.2 first support, where the Fed announcement rally up, come back, retest it, then continue higher. Or if it falls through, we look for the 116 SMA and the consolidation in this area below the 50 and the 80%, where there's going to be a small buy zone. And if there's going to be further continuation, you will look for the prior week's bottom. And at this low, I have this consolidation. This is a professional gap. You can see it between this candle and here. Prior, like 4 weeks ago, we had this gap. And I will pay attention to this area at the 17,787. I'm not saying we're going to go down there. You're going to trade what you see. We are in that uptrend. You can see that regression channel up, but in case we fail, pay attention to those levels. Let's take a look at the micro S. Oops, we'll do the micro. ES. I'm not using the regular ES or the SPX. I just wanted you to see it. We can see that the ranges in the S&P have been stronger. This is where I'm looking for the reset, but you can see consolidate, break up, consolidate, break up. And this week was an inside week. So even if I look at the higher this week here to this week's low, and I do the same thing on the extension, edit the property, so I can go back to 0, 1, and we can see where the consolidation was before the breakout. This was the gap. We pushed up, came back, retested this area, retested it to pushed higher and came back inside week. So most importantly is paying attention to that formation in case we lose this channel here from this point, and this one here. If we lose it, we look for the 50 SMA in the backside of the 0 if it holds, which is the week on Tuesday was the low. And if it falls through the 50, you look for the backside of this channel and this consolidation in this area here, and this area to hold. If it doesn't, then you look for the 100% retracement of the breakout of these candles here. So I hope this video was very helpful. Once again, you can check us out at Solstice ATR, get in contact with us, give us your commentary, and happy Easter to all. Enjoy your week. Take care. Over.